Good evening and welcome to Face to Face. For the Newsfirst team, I'm Niresh Eliathambi. Well, Sri Lankans have had some good news over the last few days. We had Fitch ratings which upgraded us out of the default, restricted default category and placed us at CCC plus, which is outside of default, just barely, but outside of it. And of course, Moody's has also moved us up from CA to CAA1. So we are apparently doing better after years of hardship and austerity for the people. Not for the policymakers probably, but for the people. Right. But how are we actually doing? In the midst of all this, the IMF continues to say that Sri Lanka's economy is balancing on a knife's edge. So what's the prognosis for next year, 2025, if our economy is still not out of the woods? And to discuss all this, we have with us this evening Mr. Dhanusha Gihan Pathirana, a well-known economist. Welcome and good evening, Dhanusha.
Good evening, Niresh. Thank you for having me.
Right. Dhanusha, what's the situation now? Now, we've had so many years of bad news. If you look back from 2019, we had the Easter bombing, then we had COVID from 2020, 2021, all that wrecked the economy, and then, of course, we had our government going into bankruptcy in 2022, and those terrible times where people were literally dropping dead in petrol queues. And of course then 2023 and much of 2024 we have had austerity, high taxation, high cost of living, nearly 7 million people falling below the poverty line. So terrible times for about 6 years now. But are we looking at better times, and is there any possibility that we could fall back into the abyss?
So, looking at the developments, especially what happened in the recent past in 2024, we can have a sort of a forecast for what will be transpiring in 2025 and also into 2026. So especially the key, I think the key measures that were taken by the government is to go ahead with the debt restructuring program. And but the unfortunate side of things is that this would mean that now we have to start repaying certainly the interest payments on the ISBs that were issued again and exchange with the foreign creditors and the local creditors who are owning these ISBs, plus the past due interest bond, which comes to roughly 1.7 billion, which would mature by 2027, and we have to pay that in installments starting next year. And like I've highlighted before also, given the fact that this agreement is backdated to 2024, there is a sort of a bunching up of payments that we have to finance next year particularly. So that we will have to finance the payments that were due 2024 also, for instance. And this has resulted in our payments rising to roughly 1.2 billion, excluding the consent fee of 220 million.
So quite apart from Sri Lanka's own economy, problems with exports and imports and so on, we basically are held down by these enormous debt repayments, which we were not really paying much of it over the last few years. That's what bankruptcy meant. But now we have come to these agreements with the bondholders and bilaterals and so on. And now we need to start some of the repayments. So that's going to bite into the amount of foreign exchange. Am I correct? Because it's not in rupees. The borrowings in rupees continue to be paid, I believe, over the last few years. It was the borrowings in foreign exchange. So now we are going to run into that situation, and it's going to incrementally get bigger, isn't it? 2026, 27, 28, it would mount even more.
Niresh, our payments will be significantly less after 26 up to 2028, and then it starts to climb a little bit more, roughly around say close to 1 billion per year after that, and then it will rise to around 1.5 billion by around 2032. So altogether we are looking at payments of roughly 18.3 to 18.6 billion, excluding that consent fee, because our GDP is forecasted to be above 99 billion. The average will be certainly above 99 billion by 2028, and the payment schedule will mean that we are, end of the day, will be paying 18.3 billion for compared to the initial amount of 16.3 billion.
So you're talking in the long term, or
yes,
that is 2028 to 2032 and so on. But we Sri Lankans have been living hand to mouth basically for the last several years. So now we are daring to look ahead for the rest of 2025, which quite frankly, a year ago we didn't even dare to look to the end of 2024 because we were basically too scared to do so. Our economy was in a shambles because of the mismanagement of successive governments. Now let's focus on 2025. What are we looking at here? Now we see that the government has reduced some taxes, income tax, which of course is welcome to many people, but will that have a huge impact on government revenue? This is of course in rupees.
I don't think it will be a significant impact. I think you're looking at around rupees 30 to 40 billion reduction that they can easily make up by the increase in the withholding tax from 5 to 10%. But the earlier question you raised, Niresh, I think that is where the real problem lies, because our imports since the mid 2024 have been shooting up even before the opening up of the vehicle market.
So mid 2024, around June,
July,
this year, our imports have been increasing. Why is that? Because vehicles are still not being imported, although the government has set February 1st of next year as the date when vehicle imports will be allowed. But what's going on? What are we importing now?
Yes, so now the strange thing is our fuel bill is down by about 9 to 10%, and while our fuel expenditure,
which is good to hear,
I think it's also because the world market prices have been remaining low during the year. So despite that, our imports have started to increase, especially on things like food and beverages, like vegetables, seafood, and there's other food imports that have, I think, like lentils, onions and so on, that is consuming roughly around $1 billion. We are looking at a total import bill of over 1 billion on those three categories alone this year. And also there's some increases in base metals and so on that categorize as intermediary goods. But there's a 50 to 60% increase, which is massive. Already they have imported close to $400 million in the first 10 months. So we are looking at 500 million also there. But we don't see significant that type of metallurgical output coming out from our production. So maybe these could be also the issue that we have been talking right throughout, over invoicing. That is to say, expecting the currency to depreciate, these traders can manipulate the trade account to purchase dollars and shift it outside. So this has been happening, and mind you, the committee, the Public Finance Committee under the Harsha De Silva, under former government, issued a report in August which states that this invoicing issue and the capital flight that happens through the trade account due to manipulation of the invoicers, both in imports and exports, is responsible for $3 to $4 billion of outflows or total flows. And this is if the government is capable of stopping 50% of this, that we are in a much more safer position in terms of our balance of payments.
But Dhanusha, let's be realistic. We are looking at government agencies which for the most part have a lot of corruption. I mean, there's no beating around the bush here. That is one of our country's major problems, and it's going to take a long time to crack down on that. It's not going to happen overnight. You are basically telling some public servants, not all of course, but some of them who are corrupt, who have been earning millions of rupees a month through nefarious means, in league with various private sector people, and manipulating so many things, whether it's customs or currency or whatever, and you're telling them, look, you've got to turn over a new leaf. That's not going to happen. You know it, I know it, the government knows it. It's, you know, there has to be a lot of arrests and prosecutions and so on. So it's a long-term thing. So we can't expect that in 2025 this situation would change very drastically. Maybe we will be pleasantly surprised, but certainly not in the next few months. So how, you know, to me this doesn't seem like it's going to be a factor. This is more a midterm factor. If you were to say in 3 years' time this will be a factor, we'll have less corruption, that sounds plausible. But certainly not in the next 6 months or so.
Possibly.
I mean,
I
mean, do you agree with that point?
I mean, it would require complete overhaul of the entire external system.
Departments. Basically, you're talking inland revenue, you're talking customs, all kinds of departments. So you know, complete restructuring basically of those departments, and of course automation, digitalization. And again, I know that a lot of faith is being placed on Dr. Hans Vijayasuriya, who has a proven track record, certainly, but I don't envy him his job, because you know, these people who have made a lifestyle, a living out of nefarious means, they will block the digitalization efforts at every step.
They will resist.
I mean, this is not the first time that projects have been mooted for digitalization. Perhaps not in this scale, of course, but in the past. I mean, why hasn't customs been digitalized? Simply because there's been resistance within, and they are past masters, some of those officials, at delaying things, and then finally what does happen is a government will change or a minister will change, cabinet reshuffles happen and so on, and then these projects just drop. So of course there is no indication that that will happen now, but there will certainly be a delay in implementation, you know, unless the government can sort of bring about a miracle within a few months. But digitalization per se requires some time. You can't just, you know, you have to get the tenders, the entire apparatus has to be above board, and then finally the actual digitalization equipment has to, in whatever form, has to come in. A lot of training, the public has to get used to it. So it's not something you can do in a hurry.
Overnight, just to point out how enormous this problem is, Now, Niresh, if we look at our export figures for the past, let's say 15 years, since 2010, it has remained at 11 to 12 billion. Now, are we supposed to believe these figures? Now, if you look at the newspapers, every day there is some new investment happening on manufacturing, exports, and you know what not. But for the past 15 years, so what has all those investments amounted to? There's, we see a lot of investments going into, actually, if you see the reports, into manufacturing and also into exports. But we don't see the numbers, right? The revenue stays the flat forever. So this clearly indicates a form of under invoicing of exports, where the exporters prefer to hold on to in a dubious way. Not that now there is some even the law allows them to hold on to a certain fraction of their revenue in the form of US dollars without conversion into rupees. But this is completely undermining that. This is completely evading the tax system, and also the foreign exchange mechanism that is happening in the country, so that the true revenues are not flowing into the system. So government, despite the difficulty in digitization and resistance by, probably I won't say all the officials in the customs are
I'm sure there are many honest, hardworking people.
So they will have to align with them and get their support to, despite the difficulty, somehow streamline the process into at least, if not 100%, but reducing this.
But again, Dhanusha, this is something more
of the long term.
To long term.
Yes. So if you look at the short term picture, it doesn't look very good, because Niresh, on top of what we just discussed on the ISB repayments, we have also a Reserve Bank of India SOP that is maturing, and Central Bank have agreed to pay this up by 2026.
And how much is that, Dhanusha?
So it was $2.6 billion. Dollars, and right now we have financed or paid back 600 million according to central bank figures, and there is 2 billion that is waiting to be repaid by 25 and 26. So that means roughly 1 billion each year. So we have, on top of the 1.8 billion, we mind you, we also will have to pay interest on the bilateral debt. That is roughly 2% of interest, but then again these agreements are backdated. So we are looking at another 420 million there.
So all this mounts up. It adds
massively
up.
Mounts up, and which reaches to up to over 2.8 billion in debt repayments alone next year. And on top of that, we are looking at now vehicle imports. So if, and in a certain discussion, it was revealed that a particular model of vehicle model, just one particular model, the electric vehicle, has already got orders up to $240 million, just one model. And I don't know where that would end. So I was forecasting probably we would import somewhere around 1.5 billion minimum. And to see that we have already put orders for one particular model up to 240 million. So because traders would know the precariousness of our external position, that they would forecast a significant depreciation of the currency as a result of this. So they would try to import more and keep their costs low, while the currency is hanging around 290 to 300 now. Even
as we speak, the rupee has, after appreciating for quite some time, it has now started depreciating.
Absolutely. Yes.
So why is that? What's changed in the last month?
Yes. So during the last few months, our imports bill have increased significantly by about $300 million per month, from 1.4 billion. Is the amount that we can sustain. About that is all that we can import without crashing our system. Now this has gone up to 1.7 billion. So as the IMF is also saying, we are on a knife's edge. in terms of the external position. So, total imports will roughly amount to about 21 billion, Niresh, and on top of that we have repatriations of the multinational companies up to about 1 billion in profits. Then there are senior officials also repatriate their incomes, and we are looking at debt repayments of 1.3 billion, excluding what I was explaining, that is multilaterals alone. So, our foreign exchange bill comes to 23 to 24 billion. While our export income, both services and merchandise goods, come to about 16 billion, and on top of that we have 6.5 billion in remittances. So, we are looking at roughly 23 billion right on the dot balance. So, when our expenditures are about to increase by about 4.5 billion next year, this would mean that most of that will have to be financed through our reserves. And where are our reserves now? 5 billion. And sorry to say, in November this has fallen by $100 million, even before this trend has started. So, we are looking at a very difficult situation for the government to handle next year.
Dhanusha, even government ministers have gone on record saying there is no money to play with. There's so much that they want to do in terms of basically helping the poverty-stricken Sri Lankans. But there's very little money to spend. For example, the health ministry budget, the education budget, those are things that this government wants to increase. And in the case of both those budgets, I think more than double those budgets. But there is no money for it, and they're quite candid about that as well. So quite clearly, the government, I mean, would you agree that they do seem to be working very hard? I mean, you see the ministers, the deputy ministers, are very hard at work. They are also in parliament all the time when parliament is in session, which is refreshing to see, because usually we had situations where parliament hardly had a quorum. You might have just 30 or 40 members out of the 225. So there is a lot of work going on, but we are basically not in the best position, are we?
Yes. Now, I think, Niresh, I think first of all what we have to understand is that this government was elected by the people against the old guard, that is a corrupt old elite guard. So, people believes and expects the government to represent their interest over the elite that they managed to throw out. So, I think right now what the government is thinking is that they are also a bit scared that these old guard or the old elite and the current business elite that is in sync might pull the plug if they try to do something to address the issue of, let's say, distribution of income or resources in a way that would adversely hit them. So, for instance,
let's clarify. What do you mean by pull the plug? Are you talking perhaps something like the rice crisis that we had
one example
a month ago, which seems to have alleviated now? The prices have gone back down somewhat, and there is now rice in the market. But a couple of weeks ago, you had prices going up, and there was a shortage, at least of some types of rice. So this was a man-made shortage. Cartel was creating this in order to drive the price up. So are you talking about something like that in other aspects of the economy?
Exactly, possibly, because certainly with respect to the foreign exchange position, these vested interests can wreak havoc if the government does not put the necessary take the necessary precautionary measures. So I think, but we can highlight few things which the government can focus, given that looking at the situation that we are facing in 2025. So now that they have agreed onto this ISB agreement, which is a disastrous agreement, but now now they can't fall back on it, because now they have already agreed to go ahead with it. So now the option, there are still few options left to increase the fiscal space of the government, which they can easily achieve. One thing would be to again look at the possibility of doing a domestic debt restructure. Why I am highlighting this, Niresh, is because we are the country that has the highest interest cost as a ratio of government expenditure in the world, which reaches up to 80% of the government revenue, which means to say, in a way, that 80% of our tax money, or what you and me pay in the form of taxes, is going to repay certain individuals who own the government domestic debt alone, which is a disaster, because second in line is Ghana. And we know Ghana also defaulted, and they are paying roughly 40% or 44% in terms of their interest cost. So we are almost double that. So we need to address this issue.
So no wonder that the government has very little money to spend on other essential programs.
We have to look at where the money is going. Most of the money is going into repay the interest of the domestic debt, especially the debt that we have issued in the years 2022 and 2023, because our interest cost was roughly 1 trillion back
which
in
is
21.
after the bankruptcy.
After the bankruptcy.
Right.
So our interest cost was roughly 1 trillion, which was having a 1-to-1 ratio which our wage cost. Now our wage cost has remained at around 1 trillion, where interest cost had shot up to 3 trillion. So this that means to say, this financial oligarchy, playing up with government debt and accumulating so much of wealth, has consolidated, not only consolidated, they have made inroads into the system in acquiring more and more through interest payments of the government, through taxation, and this is has become made a straitjacket for the government and completely restricted its fiscal space. So they have to.
But Dhanusha, all this was done in 2022.
Yes.
We saw the central bank coming out with this policy of increasing the interest rates very steeply, saying it was to tackle inflation.
Yes.
But of course, inflation continued, and it took a couple of years to bring inflation under control. But these interest rates went sky high. I mean, people who had money were getting something like 30% return on it.
Yes.
So is that what you're talking about?
Yes.
So basically, that has now come back to bite the government.
Absolutely.
That those interest rates are, those investments that people made continue to keep the government, hamstrung.
Exactly. So when you take one simple measure to balance a system, it blows out from elsewhere. So this is what we are seeing. So the government would need a more holistic approach that encompasses all the key areas, not just looking, trying to just push up the interest rates and then try to fix the entire problem. So now it has come to bite back, like you exactly said. So in order to get out of this issue, they really need to look at, they don't have to play around with the maturities. They can simply reduce the yields of these bonds that were issued in 2022-23, because right now the already banking interest rates are come down. And I was talking to certain officials in the central bank. So they were saying, even for the banks, if you look at the deposit position, the FDs they were issuing at high rates have already matured. So their interest cost component has gone down, whereas for the government it has increased. It is still remaining high. So we need to address that imbalance, where they will be easily capable of reducing 400 to 500 billion in interest costs. It's minimum.
So Dhanusha, who's making the money now? Because it's people who have FDs now find that they are making much less. Retired persons and so on who are living off FDs are in a precarious situation. So, but you said the government, on the other hand, is shelling out a huge sum in domestic in rupees, right? In interest payments.
Yes.
So who's making the money here?
So mainly we are looking at the private banks that have accumulated all the bonds, and also primary dealers, finance companies, also certain high net worth individuals have snatched up all these bonds, and they are benefiting out of this. And if you look at the stock market the past few months, especially after the ISB deal was signed, the banking stocks that did really well, because, and also their profits have increased significantly, specifically because the value of these bonds shoot up when the interest rates go down, current rates, because their yields are at a much higher rate, so their prices move up enormously.
So let's take a short commercial break now. We are in conversation with economist Dhanusha Gihan Pathirana. We'll be right back after this commercial break.
Step away from the conventional art of storytelling. Get ready for the Newsfirst Breakfast Rundown with me, Zulfikar Farzan.
Welcome back to Face to Face. We are in conversation with economist Dhanusha Gihan Pathirana. Now, Dhanusha, before the break, we were discussing the fact that the domestic debt of the government, the rupee debt, is basically keeping the government in a straitjacket. As much as the government, the last government and this government have now signed up with the international bondholders and bilaterals and so on, there is a huge issue in domestic debt. Now, how do you set about restructuring this? And has any attempt been made at all?
Right now, it seems like the government is extremely complicit with the interests of these bondholders, but they will have to revise that stance if they are serious about creating that fiscal space that they really require in order to implement or execute whatever the long-term plans they have for the economy, especially now what parliamentarian Honorable Mr. Handunetti was saying, that their plan is to grow the economy. Now, in order to grow, you need savings. And right now, our savings are being eaten up into these interest.
I mean, Dhanusha, it's the plan of every government in every country on earth to grow their economies. Except, of course, we had during the bankruptcy period, our government was deliberately shrinking the economy because they couldn't, the government couldn't service the economy, basically. But apart from, instances like that, we basically have a situation where the whole world wants economies to grow, but it doesn't happen like that. It doesn't, Donald Trump will become president once again in January in the United States, and he may say he wants X amount of growth, but it doesn't happen like that. It's, there's a combination of factors which affect, both domestically and around the world. And a lot of things are beyond the control of government. So governments can only basically set the infrastructure and the policies, but the actual investment in the economy and so on is up to, well, the private sector and foreign investors, isn't it?
So no, they will have to look at restructuring the entire investment field. Now, I don't think we have time to go into that, but if we focus a bit more on this problem of interest, which is significantly eating into government revenue. So what happens right now is that now government will have to borrow even more to finance what they have borrowed in the past. So this is, it is not a healthy trend, and also, you know, taking the government finances down a slippery slope. So they would really have to address this issue, because you know, people are, you know, raising the point that this government has just after coming into power following the presidential elections have borrowed something like 600 to 700 billion. The most of the borrowing had gone into financing the already debt that is already maturing.
So the new government really had
Yes.
no choice on the borrowings that
Yeah.
it had to make.
Yes. So about 86% of that has gone into financing the existing debt. So our debt position has increased by about 10%. I mean, about 10% of that had gone into new borrowings. But the issue is very real. So they will have to address this. Otherwise, the high or significantly large proportion of our population that is living under poverty. So government will have very less amount of resources to at least get them out of there. I mean, you can discuss what are the measures, but first of all, they will have to have the finances to address this issue. Before
So basically what you're advocating is a restructuring of the domestic debt of the government.
Yes.
So that then the government will be paying less in interest.
Yeah.
At least in the short term.
Yes.
But perhaps more in the longer term.
Yeah.
Something to that effect.
Yeah.
And then the government would have more money in hand for its various programs in 2025 and immediately.
Yes, exactly. Before drawing up plans for the economy, they should look at ways and means of acquiring the capital or building up the capital that is required to make those changes. And right now, we don't see that happening, especially probably because of reasons I highlighted earlier. So they will have to have mechanisms in place to expect what sort of resistance by these business elites who are already benefiting out of this. They have to have mechanisms in place when if at all, they are trying to address this issue. So, so we are looking at there are about 500 billion minimum in reducing interest payments. And second in line, and also mind you, the EPF that was destroyed by this domestic debt restructure has to be restored, because one thing people would do is that expecting their during after their retirement, these incomes will be, given that their incomes will be less as a result of their restructure, they would try to save more and restrict their current consumption, which should again impact the demand for our domestic production and manufacture, and also will significantly reduce their well-being after their following their retirement. So what the government did back then was that they completely made the necessary financial infrastructure to make a killing for the elites who actually own these domestic debt at the expense of the EPF holders. So government will have to address and correct that issue. And second thing would be even what the IMF has proposed. Now this government is saying, like, look, we are our capacity to do things is restricted by this particular IMF program. But are we looking at the IMF program close enough to even within that? Now that is the position of the current government, that they want to work within the framework that is set by the IMF. Okay, fine, you take that as a condition. That is their policy position. So if that is the case, IMF has already also highlighted the issue of tax concessions. That is also had gone into these businesses, both multinationals and the local conglomerates. And they are highlighting in the year 2022 alone, tax concessions have amounted to 4.1% of the GDP.
And again, after the bankruptcy,
Yes.
there were more tax concessions given.
Yes, I suppose so. So then we are looking at an enormous amount of money that has been completely just handed over to the elites, and they are making, they're just going away with it. So they will have to address this issue of distribution of income in the system in a way that would they have the capability or the capital to address the issue of poverty. So there are also IMF had warned them that they should reach 15% in tax revenue next year. Right now, I think we are at around 13%. So if we address this issue of tax concessions, government can even go beyond that target of 15%. So they have to take these bold steps to first of all, as I said, to address the issue of lack of resources that they are facing, which the public wants them to address. That is why they have put these guys in the government and in place of power, so that they become more serious about the real issues and take the steps that is required to address the economic oppression that most of the people are facing right now. So
now we are talking about the step-by-step approach, which basically will continue to keep a lot of people in hardship, below the poverty line. We have 7 million people below the poverty line. At this rate, it's going to take years and years to bring this country out of this. It's a very slow process. But is there any possibility, in your opinion, that we can make some kind of quantum leaps in foreign investment, in some kind of local industries, expanding rapidly, something to, break out of this? And I see, you have examples around the world. Of course, some countries are lucky enough to strike oil. In South America, Guyana, I believe, their economy is now growing at about 20%. That's because they struck oil, huge oil deposits, and of course, then it's great to be a Guyanese, of course. But let's that's just wishful thinking on the part of Sri Lanka. But could we do something like attract more foreign investment? But we have a lot of impediments there. Are there any other industries in Sri Lanka which can boost the economy to a significant level?
Right now, Niresh, I think the problem would be, given that we have signed on to this ISB agreement and looking at the repayments that are due in 2025 and 2026, these repayments are going to place the economy in a very precarious situation. We are looking at our reserves. It's not looking very very rosy. So then investors would look to this position and they wouldn't feel very safe.
Absolutely, because any foreign investor first does their homework, right? They ask an audit firm or a law firm or consultancies to evaluate the country, evaluate the political stability, the infrastructure, the cost of energy, labor, labor regulations, natural resources. All these things are actually looked into before a multinational corporation says, okay, we are going to invest $5 billion into this country. Right.
And even if you look at the type of investment that have come into the country, we can categorize them as what we call third world type of investments, where it is labor intensive and the insights of scientific advancements are not absorbed into the production structure. So as a result, our labor productivity remains stagnant. So these are the type of investments that have come into the country, and also the local investments have actually set the stage for that. And it is actually if you look at the economic histories of countries that have come up during the last half a century, that it was the domestic capital formation that set the tone, that set the stage, that gave the particular signals. These are the type of industries that are growing. And so for when a foreign investor looks at an economy, they first look at where the domestic investments are going, and then from that they take a signal, okay, these are the things that are growing, so we should also try to focus on that. So we can't expect foreigners to transform us. So what if the foreigners don't show up? So we'll have to, for some reason, if the foreigners don't show up, then we'll have to just forget about it. So we have to look at the economic histories and learn from that, say from countries like Taiwan, South Korea, and so on. So which the investment drive or the transformation of the capital stock was purely a plan implemented by the state, which the private sectors, domestic private sectors, had to adhere to that plan. And then, so later on, the foreign investors also caught up with the trend and investments moved in. But the initial transformation was done through state-driven planning. But what I am trying to say here, Niresh, before going into that all very complicated issue, it might not sound complicated when you do, but still there are certain other aspects of the economy you will have to balance. It's not just about driving a production structure. So before going into all that, the government will first need to sort out their financial position. They need to have a very, the financial freedom in order to address these issues. That is where, the initial steps that we just highlighted become very critical in first of all creating the fiscal infrastructure that is required to launch into a industrial plan and an economic planning drive like that.
And also, Dhanusha, we need to have some kind of long-term planning, which is not wishful thinking, like former President Ranil Wickremesinghe famously said, by 2048 we are going to be a developed nation, but he neglected to say what we'd be in the, along the way. In the meantime, where would we be by 2025, by 2030, by 2035? It was almost like, okay, we're going to wave a magic wand, and 2048 we are going to be, something like Singapore. So development doesn't happen like that. You have to have a plan for every year, for every 6 months. I mean, if you look at the government of Singapore, they have such plans, which are going on and are constantly redone. They relook at those plans all the time. So that's how Singapore keeps evolving and facing up to whatever global challenges, and they keep going. We never seem to have such a plan. We have sort of a wish list of various presidents who come and say, we're going to be this and we're going to be that. But there's no actual time plan. At least this government we can see, is working hard to deal with some of these issues. But it's a very tough call, isn't it?
I think one more point we can highlight is also about a forensic audit on what actually happened to this mountain of debt that piled up throughout the years, because even if we have already signed on to the ISB program and also now mostly restructured our bilateral debt, and therefore now the government is saying that no, they are not going down the path of another new DSA, things like that, still they still have the option of doing an audit into what went on. And because like former auditor generals like Gamini Virasekara have highlighted this issue since I think 2018, that in government accounts the borrowed money does not show up in the asset column. About 65% of the borrowed money is not showed up, is not shown in terms of assets.
I mean, there are even more glaring issues.
Yes.
For example, the cost of construction of our expressways is among the highest in the world.
Yes.
I mean, globally there is a standard. If you're constructing an expressway on a flat area of your country, it's so much. If it's marshy area, it's so much, and so there is a proper costing. If it's mountains, I'm simplifying things here, but of course, in our case, our expressways have been enormously costly.
Absolutely.
So where did that money go? I'd like to know, because you and I are paying for this in the end, as are all Sri Lankans.
That is the issue.
So there needs to be that kind of audit, and then of course that would stamp down on any such behavior in the future. Because as long as those guys got away with it, the carrot is there for people in the future to do the same thing if they can get away with it. That's one. Then the Sri Lankan Airlines Airbus scandal, which Airbus has admitted and paid billions of dollars in fines in Europe, where they said that they bribed our Sri Lankan Airlines officials to purchase aircraft, which our country certainly had no need for, no use, and bought them at exorbitant prices as well. But we ended up paying for all that. Goodness knows why. We shouldn't have paid at all. We should be now demanding all that money back from Airbus industry and actually suing them into the ground, basically.
Because this sort of thing was done quite recently by Ecuador in 2009 under the President Rafael Correa. They established a debt auditing committee, and through that they found out most of the debt the governments borrowed previously had actually benefited certain private interests, and they were not used in the best interest of the public. So, basing themselves on that particular argument, they managed to get a 65% haircut on the debt on ISBs. And even before that, when in the secondary markets, when their bond values collapsed, they started purchasing at 90% discount. And then later they issued unanimously a new set of bonds with 65% haircut, solely basing on the argument that the debt that was borrowed was misused.
So your contention is that the present government, the NPP government, needs to go back and look at where we borrowed, what we borrowed, and where that money has gone, and that we might end up actually saving a lot of money by doing that.
Exactly, because the former administration under Ranil Wickremesinghe completely neglected all that, allowed that type of swindling to go on, and that is why clearly the public kicked them out of office and gave this people oriented government the chance to lead them. So I think the government should take that very seriously and understand the mandate they have got from the public. I think they very much do, but I think what their problem is that they are also bit worried about what would be the repercussions of when these.
However, they do have the mandate, so they can go ahead.
It is up to them to figure that out, how to face the resistance.
So 2025 will certainly be a decisive year. A lot of things need to be set in place, and I'm afraid we are out of time. It's been a very interesting discussion with Mr. Dhanusha Gihan Pathirana, economist. Thank you very much, Dhanusha, for being with us. And to you at home, thank you very much for watching, and don't go away because the news is coming up next. Have a good evening.